morning, everyone. Welcome to the 24/7. My name is Niharika Valia, and I am with you with the area of AFM. Good morning, sir. Okay. So today I am here with you with a specific area. I'll be talking about the various assets in an organization. So let's quickly move on and study what is an asset in detail today. Okay. So when we talk about an asset, what exactly is an asset? Uh, Today I'm starting with the area of various terminologies which are used in terms of accountancy, which are responsible, which are really important to understand the entire working of the accountancy all together. So, right, we'll be starting with that. Anything which has an economic value is called an asset. So, anything which is an economic value, for example, if someone who is basically okay, so let's talk about that. If I'm someone who is into selling of, say, an electronic items, so I'm someone who sells electronics items. So for me, laptops, for me the washing machines, then for me the microwaves, everything that you will find in an organization that is being there, it is just a good. What's a good? We will just purchase it for sale. We will not purchase it for the sake of it that we would be using it on our own, isn't it? So that is something, that is the first point we need to understand. Anything which has an economic value would be considered here. So, on the basis of the entire asset that we understand, assets is something which is of a specific worth in an organization. So, asset, how do we define an asset there? Asset would be anything which is of economic value, but basically, asset is something which would be helping the organization to earn revenue. We will not sell an asset and earn. This asset will help us to make something or which can help us to earn, or it can be the reason through which we can earn. For example, the premises, the organization that is see, if we talk about a bank has a specific place where you work, right? So the revenue is being generated because there is a particular place where everybody is sitting, and that's called a bank. People go into that area, they go into that setup and get their work done. And for the services, they pay the bank, right? So when we talk about this area, it would be treated as premises or any other area that in terms of bank we can call the desks, the laptops which are kept, the printers, and even the cash counting machines. They are the reason that the banks are able to provide their services and through which they can generate their revenue, right? So anything through which, not by selling that particular thing, but through that particular thing you are able to earn, that is what we call an asset. The thing that you sell then you earn, that is called a good, but the thing through which you earn is an asset. Now the assets are further divided into this particular classification. Number one is real asset, number two is fictitious asset. Number one, it actually exists, and secondly, it does not exist. We're just keeping it in that particular scenario, that we're just keeping it for the sake of it. Some expense would have happened, it's there in the books but not in reality. Then real assets are further divided into two types: fixed assets and current assets. The fixed assets are also called non-current assets. The assets which are used by the organization for more than 1 year. For example, if we buy a car for the organization, a car's life is ideally around 10 years, it goes good, right? So if that particular car is used for more than 1 year, it would be called a fixed asset. And what are current assets? The assets which can be materialized, converted. Rohan, so we're just moving towards that area as well. I'll be talking about each and every classification individually today. Right? So just an overview, and then I'll move towards that particular scenario. This is called mind mapping there. If you understand the entire classification, it becomes easier to correlate. Okay, then in terms of current assets, they say that maybe cash. Think about it. I have a rupee note today, and maybe tomorrow I won't even have it. So even today only, within an hour, maybe I'll lose money there. 1 rupee, 2 rupee, 100 rupees, we don't even know how much money would go out of your pocket. So that is basically the current assets. The current assets can be of two types, liquid and floating. The ones which can be easily used and floating is highly liquid assets. They are something that they are there in the market and boom, they're gone. That is something floating assets are about. We'll be talking about both of these and with examples. But let's talk about the other area now. Fixed assets are those which are there. See, if I say I have a fixed asset, my fixed asset might be the equipment that I'm using, right? So for me, I can touch this pen. That is tangible. But what about the trademarks and the copyrights that we carry? We carry the copyrights now. Whatever the content we are creating, the organization is having the copyright of it. What is it about? It's an intangible asset. Nobody else can touch it, but it gives the organization a right, right? So it is basically intangible assets. And when we talk about the tangible assets, tangible means which can be touched. I can touch this pen, but think about it. If I use this pen over a period of time, will it remain the same? Technological obsolescence will not affect it, or will it always affect? That is called a wasting asset. The assets whose value goes on decreasing over the period of time, it's called a wasting asset. And non-wasting assets refers to those assets whose value does not decline over a period of time. For example, land. Do we say that this land is just around millions of years old, so the value of the land should decline over a period of time? This doesn't happen. The valuation of land will always increase since it is something which is a limited resource, right? So, on the basis of this, let's talk about all the topics in detail. Now, starting with the real assets. Real assets are those physical assets that have an intrinsic worth. Intrinsic worth means there is some internal value for the organization. Then real assets would include precious metals, commodities, real estate, land and equipment, natural resources. These are all real assets, right? Then the next part is called the fixed assets. What do we call a fixed asset? Fixed assets are long-term assets that a company has purchased and is using for the production of its goods and services. So they are using fixed assets are basically long-term. That means any asset which is used for a longer period of time. Then they are non-current assets which are used for more than a year. Then there currently the term that is used is property, plant and equipment. These are recorded in the balance sheet as per the AS 10 accounting standards. Among the accounting standards are what exactly? ICAI, Institute of Chartered Accountant of India, has given certain rules and regulations of how any organization should work. So when they have given these kind of things, then there they talked about the fixed assets as well. They have explained about the working of the non-current assets under a particular standard called AS 10, which is property, plant and equipment, PP and E. So it is recorded in the balance sheet. The balance sheet is a place which is a statement where the organization records all the assets as well as the liabilities of the organization. Liabilities and capital. We have talked about the equation, the balance sheet equation. How do we build up our assets? By taking loans from other people as well as the capital. So assets is equal to capital plus liabilities. That is, fixed assets is the assets which can be which are used by the business for a period of more than a year. Then let's talk about the tangible assets. I can touch the pen, I can touch the land, I can touch the premises of the organization. This is where we talk about there is a monetary value and there's a physical form of that as well. Tangible assets are typically the ones which we will find that there are always a transacted in terms of money. It's always in terms of money and it would vary in different markets. That is something that can say it's all about the worth. When we talk about the worth, it might vary. Every organization looks at the money or that particular asset according to their importance. So tangible assets are those assets which can be touched, which has a particular physical form. Tangible means which can be touched. Then let's talk about okay. I think I missed out the part of intangible. So before I move towards the wasting, let's understand intangibles as well. Intangible assets are those assets which are not in the physical form, but they have a monetary value for the organization. For example, the organization got a particular okay, the organization has recently got its patent done. Coke and Pepsi have got their patents done, so you and I, we cannot prepare a particular drink which is similar to their drink and sell it to the people. Patent, trademarks, copyrights, these are something which are intangible in nature. We cannot touch it, but yes, it exists and they exist in the documentation. So these are intangible assets. Okay, after intangible assets, the next kind of assets are called wasting assets. How do we define the term wasting assets, everyone? The wasting assets. When we talk about the wasting assets, these are those assets which have a limited life. Most of the particular the assets of an organization, you'll find they have a limited period of time and it declines irreversibly. That means it's not like that the value of the asset would go like this and then it would start dropping and then it would go again up and then goes down. No. If you and I are using any asset, its value is going to decline because of the usage, right? Correct, sir. And why is there a decline? If you talk about the decline there, the decline is there for a multiple reasons. Okay, let's talk about the multiple reasons due to which you'll find that the value of the asset is declining. The assets are declining because we use them wear and tear, right? Then the second one is use and wear and tear. Second one would be technological obsolescence. Okay, one of the basic and the most simple example that I can talk about is for technological obsolescence is okay, so when we talk about the technological obsolescence, there's one more reason behind it. Okay, let's talk about everybody would have seen the Nokia phones. As a kid, I had seen the Nokia 3310, I believe. That was a particular button phone which was used all over our country and was very, very popular. Nokia was a brand which was widely accepted by our country. But what happened? Over the period of time, nobody's using it today. Why? Because all of us has moved on towards the touch phones and we are using touch phones. So what has happened? The Nokia phone's quality didn't decline. There was another level technology which led to its death over the period of time, right? So currently, if you and I we buy a particular phone, we will not find that the Nokia phones are that much costly as compared to the touch phones that we are using today. So that is because technology, the Symbian technology that they were using, has become old, and Android had taken the path, right? So that is what we call as the wasting assets, the assets which has a specific lifespan, and at the same time it declines because of the usage over the period of time. Okay, now the next point is the current assets. How do we define the current assets? Any assets which are used. It says current assets are all those assets of a company that are expected to be sold or used as a result of standard business operations over the next year. That means any asset that we are using within a time span of 1 year. It can be cash. Cash is something which just you we might be talking today and just in a moment I might be facing someone who will be asking that, oh, you were supposed to give me money, or even the it's morning time, so it starts with the very basic things that you might be looking for, the milk and the bread. You're just looking forward towards your breakfast. So in terms of the cash, you lose cash every single morning. So current assets are something which changes over the period of time and in a period of less than 1 year. So this is a highly liquid part of the organization, that is cash. But not only the cash, but its equivalents as well. Bank balance. Okay. Number one is cash, second one is the bank balance, and there are certain securities which I've just kept that I am done with it. I'm selling these off. For example, share traders, they are always putting this particular that there are certain shares which are there for them for its own sale. That is it. We do not want to keep them anymore. That would turn out into be a current asset. Then accounts are receivable. If you're supposed to receive money from someone, you'll be keeping a note of it. I had given you money, give me my money back. That is what we call the accounts receivable, everyone. Next is stock inventory. Stock inventory means I am a seller of goods. I sell goods every day. So I have an inventory to maintain. So the inventory that I'm having, the opening stock of it, then the closing stock, whatever is left by the end of the day, that is stock inventory. Then the next point that comes is marketable securities. What do you mean by marketable securities? The securities that we are keeping and we are thinking about using them in the market. The value of these securities does not change very easily. So any securities which we are thinking to sell within the period of the next 3 months, and the value of those securities is stabilized. It remains the same. And then prepaid liabilities. I was supposed to pay you certain sum on maybe on 1st of January, and it's right now what, December? It is 15th of December. I'm just about to pay you on 15th of December, isn't it? So if I'm paying you on 15th of December and I was supposed to pay you on 1st of January, what's the difference? It's around 15 days there, isn't it? So I've paid you in advance. Then at this point of time, for me, it's an asset, and that to a current asset, because it would decline. It would be gone within a period of 15 days. But it's a prepaid liability, and I can always say that I have paid you in advance and you cannot ask me to do anything else, especially when we talk about the rents. If I've paid in your advance, you cannot ask me to leave because the amount that was supposed to be paid is already paid. Then the next part is liquid assets. Now we'll be talking about what is the difference between liquid and the floating assets. Okay, I know there are so many terminologies that we are dealing with. I hope everybody is able to understand the terminologies that we are dealing with. In case it becomes a little overwhelming and it becomes difficult to learn all these together, what I can say is just take a pause for every particular the definition that you are learning here, and keep a quick note of it. Just make a one liner and note down whatever these assets are, because this helps you to understand the entire accounting procedures, right? Here comes what is liquid cash. When we talk about liquid cash, it is something that you own that can quickly be simply converted into cash. See, cash is always there. Bank balance can be converted into cash. I just have to go to the bank. I have to give them the withdrawal slip, or I'll just carry my ATM. And that is it. The bank balance is converted into cash. Then comes the marketable securities. Marketable securities would include our any securities which we are ready to sell in the next 3 months, and its valuation does not change a lot. It remains the same over that period of time. And yes, cryptocurrencies cannot be a part of it because it is highly volatile, right? So marketable securities are any securities which you keep for a period of 3 months and it is near about at a stabilized rate. Okay, the last one for the day is called floating assets. Now, the floating assets are the one which are what I said, they're highly liquid. They're not liquid, they're highly liquid. Why? Let's talk about it. Cash, I was just telling you right away, you know, I have 1,40,000 rupees of worth of cash. I was just telling you, someone came and said, ma'am, you were supposed to give me 300 rupees. I said, okay, there goes your 300. Then within the morning by 9 o'clock, another creditor came and said, you were supposed to pay me 40,000. I just gave him 40,000 within a time span of how much time? Within a time span of maybe 2 hours, and then I'm down by 40,300 rupees. So it just changes during the day even. You cannot control it. Then the next part is the cash at bank. Same goes with us. Currently, we all have got GPay, PhonePe, Bheem UPI. Every single day we are making the payments. Does the bank balance remain the same? everybody wishes, but it isn't like that at all. It is cash at bank. Then the next point is stock of goods. If we have stock of goods, the opening stock, the closing stock, whatever stock that we have, in terms of the goods, what are we dealing with it? The stock is going to change. If the organization is good, you'll always find they're able to sell their products. So due to the sale of the goods, they're able to generate money. Then bills receivable, the amount which you are supposed to receive from people, that's called bills receivable. Right, so bills receivable means if you're supposed to receive money from the people and you are giving them that particular order that they are supposed to pay you after maybe 1 month, 2 months, this is always less than an year, right? So bills receivable are written form that you have ordered someone to pay you certain amount of money after certain period of time. So there's a certainty of what amount of money we are talking about. So these are all the different kind of assets that you find in an organization. So that's why I was dealing with that particular the point that we did in the beginning. This really helps a lot to understand what exactly is accounting and how do we deal with those minute words that we use every single day in terms of accountancy. Acha, there's one particular thing that is left. One is called fictitious assets. The fictitious assets are those assets which are not tangible. They don't exist exactly. For example, in order to generate money, in order to raise shares in the organization, I in say sorry, not shares, I'll go for debentures. Debentures are basically the loans which the organization take from general public, not from the banks, because they feel the banks are giving loans at a very high rate of interest. Now it's time that I go to people and ask them to give me money. But the debenture is of rupees 100 and people said that we won't give you a loan of 100 rupees. I said give me 98 rupees. I'll pay back you 100 plus I'll also pay you interest. Then you'll be like, okay, I am getting 2 rupees here on the particular debenture unit as well as I'll also get interest. I said, yes, you will also get interest. So then I have lured you to give me loan. So this is the amount that I am losing. I'm not going to get this 2 rupees. Now this is called discount on issue of debentures. Just to issue debentures, just to raise money, we are facing troubles, right? So that is what we call fictitious assets. But this was required by just giving away this 2 rupees thing that we do not need this 2 rupees. We are able to generate money, aren't we? So it is going to help us a lot. Then this is the amount that helps us plus the interest that is going to be given to those people. This is going to be an expense for the organization every single year till the time they are not they haven't paid off the amount. So the main purpose is to create the account for expenses which are not placed in any account headings. So fictitious assets, they have no physical existence. Rather, they do not have the documentation as well. It just exists in like a good amount of money was spent in one particular year, and it might be something or the amount which has been foregone, and its benefit is being reaped over the period of time. So it is existing, and we are just acknowledging the fact that yes, we had made a sacrifice due to which we are making money. So they are written off. They are just subtracted from their areas over the period of time in the profitable financial years. So this is what we call fictitious assets. So today was a session which was more about the entire topic of learning the various terminologies. I hope it was helpful for you. If it was, then kindly be there in the next class as well, where we'll be talking about all these assets in depth, right? Okay. So now we our batches would be starting tomorrow. So the countdown has officially begun because our JIB batch is about to start from tomorrow onwards. So if you're looking forward to our batches, then kindly go ahead and check out our website or in our app. You'll find the details of our JIB batches. The batches are just about to start from tomorrow. So if you're looking forward to the live batches, it becomes easier now to interact with the faculty as well as to study the things along with that planner, because whatever the syllabus would be when you're dealing with it, it becomes easier to cope up with the work, right? So here comes the JIIB new target batches which are about to start, and this is for the 2023 May June 2023 batch. Now these are the various batches which are there. If you would like to go for the bilingual batch, it is there. For the JIIB batch for this is for English medium, and this one is also for English medium, and there is a bilingual batch for the new target batches also there. So among these various batches which are available for you, all you can do is, if you're looking forward to a JIB English medium batch, the batch is about to start from 16th of December. Number of hours 145, 73 test series and 67 ebooks are available for you. All you need to do is that if you're looking forward to it, this is as per the new syllabus, and all the faculty who is working, the details of all the faculty is given there. And if you are pursuing towards the May June examination, this is the perfect time. Start before the examination is there, so that by the time the examination is there, you are at least done with your revisions and the test series. So this is where we end this particular session, but you can use the discount code of 5Y541, which would give you a discount of 81%. So you can take up this particular course for 3999.20. So if you're looking forward to it, then kindly go ahead and check out our website or our app for the further